The same with Apple. Nobody thought Apple could win against Nokia, Motorola, Ericsson. How could they? Apple had no share. They had all the share. How could this be? Well, Apple redefined the cell phone into a smartphone, a computer in our pocket. And now we have nearly a $3 trillion company. Bitcoin, when we first gained exposure to Bitcoin in 2015, many observers basically dismissed it as, well, that's a marketing gimmick from this new firm that's trying to find its way onto the map. And of course, I think that was at a $6 billion market cap or network value. Today, it's nearly $1 trillion. That was 2015 to now, 7 years. It's $1 trillion, from 6 billion to $1 trillion. And remember, people were calling it a Ponzi scheme. We had to suffer the arrows associated with that kind of criticism. And even Tesla more recently, 2019, Tesla was not going to be able to scale its manufacturing. It was going to run out of money. The large auto manufacturers were going to run circles around it. And what do you know? It's up 20-fold since then, $1 trillion company as well.
It's hard to talk about the topic of women in investing without mentioning Cathie Wood. The founder, CEO, and Chief Investment Officer of ARK Investment Management was the first woman to claim the title of manager of the largest actively managed fund. Recently, Cathie Wood is emerging to be one of the biggest supporters of cryptocurrencies, especially Bitcoin. The leading crypto is performing exceptionally well, and no doubt Cathie is highly bullish on it. Hello and welcome to Money Talks. In today's video, ARK Invest CEO and CIO Cathie Wood updates on Bitcoin's performance in the first quarter of 2022, peaking inflation, consumer sentiment, and why disruptive innovation is inherently controversial. She also discusses recent market signals as well as economic indicators. Make sure to stick around till the end of this video to see how Wall Street star Cathie Wood is defying her doubters. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
We've seen an asset allocation shift towards crypto, towards gold. Crypto was fairly flat, as measured by Bitcoin at least, in the first quarter. Gold was up 7 to 8%, so both of those much better than both equities and bonds. And the dollar there, that was also up 3 to 4% in the first quarter. We're seeing the dollar continuing to move up against the expectations of the bears out there who believe that the twin deficit, so the federal budget deficit and the trade deficit, are going to cause an implosion in the dollar. The dollar is moving up, and I do believe there's a terms of trade reason for it. China's become more hostile to capital. Europe's in recession and on the border of a war. And the U.S. just seems like a safer place to be right now. And I'll end right now on by just finishing up where I started. Disruptive innovation is inherently controversial. And the strategies focused on disruptive innovation are volatile, to be sure. And I just want to recount a little bit from my career and focused on disruptive innovation. Let's take Amazon, for example. Where I was in the business at the time, we bought it close to, it's going public. And I remember during the tech and telecom bust, it did come down dramatically, and the reason it did is because investors wanted their companies to be profitable, and Amazon was investing aggressively to capitalize on one of the biggest retail opportunities in history, and most investors couldn't see that, which was surprising to those of us who focus on disruptive innovation. And I can't tell you how many times The sell side and the buy side said, this thing's going bankrupt. This was a figment of Jeff Bezos's imagination, of Wall Street's imagination. And now we have a $1.6 trillion economy. Well, let's start actually with disruptive innovation. Disruptive innovation is inherently controversial and tends to be quite a volatile strategy. If you have a long-term investment horizon, which you have to when you're investing in disruptive innovation, things tend to work out. And I'm not really saying anything about the future, can't make any guarantees. However, if you look at the 5-year track record of our strategies, including the significant volatility we've seen in the last year, you will see numbers that I would put against any other active management strategy out there. We have outperformed the broad-based benchmarks, whether you're talking about the S&P, Morgan Stanley, MSCI World, or the NASDAQ. And as I understand it, most active managers have not. In fact, the vast majority of active managers have not. And so, yes, we do go through periods of significant volatility. But as we also say, if we've done our research correctly around Wright's law, understanding learning curves, cost curve declines, and understanding the price elasticity of demand, our companies are usually rewarded for their breakthrough technologies that are transformational in terms of changing the way the world works. And our conviction in our research has only grown. If anything, during the last 2 years, we have watched our research point to an expansion in the market cap opportunity associated with disruptive innovation from $75 trillion, which was our 5-year expectation 2 years ago, to $210 trillion, with artificial intelligence being probably the biggest reason. The way the bond market has interpreted this is, okay, now the Fed knows that it has to raise the Fed funds rate another 50 basis points. So right now we're at 0.25% to 0.5% is the range for the Fed funds rate, and many think that it will go now as high as 1%. And as you may know, we have been flagging that the bond market itself is flagging warning signs to the Fed. And so we'd be surprised if they go the full 50, especially because the bond market is sending stronger signals today than it has for some time. The yield curve has inverted. The 10-year Treasury bond yield is below the 2-year Treasury bond yield. And it's been, and when we get to the bond section, I'll talk more about the yield curve. But that is a sign to the Fed that either growth is going to disappoint or inflation is going to disappoint, or both during the next few months to a year. What's also very interesting is the administration is observing with some alarm how energy prices are crushing the purchasing power of lower income individuals, lower to middle income earners. And it has released or announced that it is releasing 1 million barrels per day from the Strategic Petroleum Reserve for the next 6 months, almost up to the midterm elections, conveniently. We would suggest, and we're also seeing signs that the administration is warming up to the idea that for national security purposes alone, we should be ramping our own energy production back up to its peak and beyond, and become independent of anyone out there in terms of our energy needs, and even to help our allies and our partners in the rest of the world, certainly in Europe, overcome their dependence on Russia. So we shall see if the administration does move more aggressively in this direction. It makes sense. It will create jobs. If the economy is slowing the way we think it is slowing, the administration will want to create more jobs. And so hopefully we will see a more friendly attitude towards investing in energy for national security. Clean energy is better, but energy independence is paramount now.
2022 has been a dismal year so far for Wood's funds as growth pockets of the market are punished by surging interest rates. ARK Innovation is down more than 30% and sits more than 50% from its 52-week high in June 2021. When Cathie Wood reflects on her career, she said she attributes any professional marginalization to her contrarian views rather than her gender. On any given day, she is rarely reminded that she is a woman. On the other hand, her exchange-traded funds, which focus on disruptive innovation, have suffered year to date. Still, Wood remains among the largest active managers with more than $21 billion invested in her funds. By being unwavering and publicly vocal about her conviction in investing in the future, Wood gives her critics ample opportunity to take aim at her unique strategies. Through her mystical conviction in provocative growth strategies in the U.S. equity market, ARK's ETFs were created. Her strategies focus on 5 disruptive technologies: DNA sequencing, robotics, artificial intelligence, energy storage, and blockchain technology. However, Wood is often criticized for the expensive, high multiple, and sometimes illiquid stocks in her funds. ARK's flagship fund, ARK Innovation, made popular high-growth names like Tesla, Zoom Video, Roku, and Teladoc Health. So, do you agree with Cathie's take on disruptive innovation? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.